And thank you everybody for joining us today. The Vegas Chamber is so proud and honored to be your source for the latest business information during these ever-changing and crazy times. We're sure grateful for your membership. Today's topic, as you know, is about the PPP and the EIDL loans. And, you know, we're going to try to unpack all this today and give you the best ways to access what you need to know about applying, and if your business is eligible. So just a couple of things to let you know about before we jump into this conversation. We have a couple of upcoming events at the Vegas Chamber that I want you to know about. On Tuesday, January 19th at 11:30, we're going to be hosting our second installment of our webinar series called Legislative 101. That one's going to be everything you need to know about taxes and how they're going to impact your business, impending tax legislation coming up from the 2021 legislature. And then also, you really don't want to miss Preview Las Vegas on 1/21/21, January 21st. That's next Thursday. We're going to have a fireside chat with CNBC's Contessa Brewer and the LVCVA's CEO, Steve Hill. I also sit down for a conversation with Derek Stevens, owner of the D and Circa. And then we're also going to have a very special surprise from Vegas headliner Frankie Moreno. So please go to vegaschamber.com to sign up for Preview Las Vegas today. All right. I also want to thank our sponsors for today's webinar, UNLV MBA program, and then also SCE Federal Credit Union, because we certainly couldn't do these webinars without their support. Speaking of support, now I want to introduce Joe Amato. He's the Nevada District Director of the SBA, Small Business Administration. We also have other guests with us today. Phyllis Gurgevich, she's the President and CEO of the Nevada Bankers Association. Hi, Phyllis. Stacy Watkins, the President and CEO of Lexicon Bank. Hi, Stacy. And then Chris Schlaffman, VP Commercial Loan Officer for Clark County Credit Union. Thank you guys all so much for being with us. And without any further ado, I will hand it off to Joe Amato for the update. Hi, Joe.
Okay, well, thank you so much. It's very strange that we're here again talking about PPP or Paycheck Protection Program. You know, this being this second draw, a second version, I think there's been a lot of improvements on where we're going and how this may be rolled out and how this will work overall for small business, especially our small business here in Nevada. I'll be talking today about the rollout itself and dispelling a lot of craziness and rumors that are out there. Talk about first draw loans and forgiveness, talk about second draw loans, talk about the forms and guidance that's being put together on an ongoing basis, some of which I have the latest information from this morning, and talk about the resources that are out there to basically support and help you. I wasn't quite sure if I should go into it at this point, or once I finish at this point, there's going to be some other people talking, then I'll go into the full information. Is that what we're doing, Mary Beth?
Yeah, that works, Joe. And then we'll take questions from the audience as well.
Okay, sounds great. The most important thing to know is in the rollout. This is going to be a little bit different than what we did last year. The banks will still be the primary facilitators of all the PPP loans. They're the ones that are carrying the heaviest load, and everyone that's on this video that are part of the banking industry, they're taking PPP applications. My hat's off to you. I know it's frustrating and crazy, but it's a little better than last time, and I hope it ends up being a lot better than last time in actually succeeding in getting us out of this disaster that we've been in the middle of. Tomorrow, any lender under $1 billion in capital assets will be taking PPP applications and will be able to submit them to the SBA portal. And on Monday, all the other lenders that are not already included, that include CDFIs, minority depository banks, CDCs, microloans, and all banks under $1 billion, as of tomorrow, they will be actively collecting data, information, applications to submit to the SBA. The SBA process is going to be a little bit different than last time, and please be patient with your lender. The lenders themselves last time basically would take your application, submit it to the SBA portal when it wasn't crashing, and basically we're getting what they call an E-Tran number immediately, which was giving them the authority to basically work on closing the loan. The SBA is going to do it a little bit differently this time. They're actually not using E-Tran as their platform for accepting SBA PPP Second Draw applications. They're using what we call an API. I have no idea what an API means, but it means that there's software other than the E-Tran system of the SBA that's going to be accepting these applications. Why is this important? Because when you submit your application, it is going to go through a review process with your lender. Once your lender reviews the documentation and make sure it's accurate and ready to go, they will then take that information and submit it on the SBA portal. Instead of getting an automatic E-Tran number like last time, since we're not using the E-Tran system, they were going to be submitting it to an API. The API will then review through whatever mechanisms they have internally, review all the documentation that has been submitted by the lender. And we are told within 1 to 3 days they're going to return a transaction number to the lender so that they can proceed in closing the loan. So everyone that is going to be bugging and calling and asking the banks, I'm giving them a little bit of reprieve by giving you this information up front and making it a very important point. Once you submit the application, there's a review process by the bank. There's then a review process after they submit it to the SBA through the API. There will be a review process by the API. Then once the lender gets the number, I guarantee they're going to fund you somewhere between 1 to 3 days. So if everything works perfectly, I think anyone who puts in an application, you probably should get your money hopefully within a week to 10 days, but that's not a biblical statement. That's my best guess based on the fact that I've been doing this since March and have seen every angle of this from the banker's perspective, the SBA's perspective, and now we have an API, which is going to actually add to the equation. So please understand that. And I'm saying that specifically because of the bankers that are on here that are taking applications. The last thing you need is to be calling them constantly asking, where's my application? Where's my application? The SBA actually through this API is going to keep the applicant updated through some process, which I haven't seen work yet, but hopefully the SBA is going to be involved, or the API is going to be involved in keeping you instructed on where the process is. And I know the lenders want to get the money out as quickly as possible and move to the next loans. So hopefully that's helpful. And I see some smiling faces from some of the lenders on this call. So they are appreciating that I'm putting that up front. Let's talk about where we are in the process. Okay, for those that did not receive first draw loans, the door is now open to you. Those who did not receive first draw loans before August 8th, they are now eligible to go back to their lender and do a first draw loan again, or do a first draw loan for this first time. It'll be using the same 2483 application that was before. It's but a new iteration, a new revision, so on and so forth. But they will be able to get first draw loans and apply before March 31st, 21. So first draw loans are going to be still active again for those who didn't get it before August 8th, and they will be active until March 31st, 21. Everyone else will be applying for second draw loans. That will be a whole separate subject we're going to talk about. For eligibility for PPP loans has been completely revised, and we're going to go through that specifically in a little bit. So how you're eligible for first draw, second draw is completely different, and we're going to go back through that with detail. And also the coverage of eligible expenses. Sorry, it's still 10 o'clock in the morning and my brain is at 5 a.m. Eligible expenses has been expanded. Before it was payroll and sort of occupancy related expenses like rent, mortgage interest, utilities. Now, which is to the chagrin of every lender looking at me, it can include for PPP expenses. And why this is important, because this is more of the forgiveness side. Operating expenditures for the company, property damage costs, if there was any damage caused by any riots or anything that has happened in the interim. Hopefully in Nevada, we haven't had that problem, but in other areas of the country that might be relevant. Supplier costs, which we're still not sure what that means. And anything that you used as a business to buy PPE, that's protection equipment, whether it's putting screens or plexiglass up for people to interact on a retail basis, or it's masks, or it's gloves, or lotions, or whatever it is. That's all going to be included in the forgiveness side of it. And in certain areas, if you were shortchanged in your PPP loan amount, there was a miscalculation. They couldn't change it because it already is in the E-Tran system. You can now basically go back to your lender that you did your PPP1 for PPP first draw and ask them for an increase in PPP1. And again, that's only through March 31st, 21. For all intents and purposes, what we're focusing on is obviously helping those that didn't get first draw and supporting all those who got first draw and they still need second draw. And we'll talk about those requirements. Who can apply for PPP first or second draw? It's every business entity out there. If you have an existing business with a business license or a business in operation, corporation, LLC, partnership, you're eligible. Sole proprietors, independent contractors, self-employed individuals, you're eligible. 501c3s, and I'll put a big smile on Beth's face, 501c6s, which are your chambers and your community organizations. 501c19s, which are your veteran organizations. Anyone involved in tribal business, eligible. Now, these are new additions: housing cooperatives, destination marketing organizations, and there are some eligible news organizations that now can apply for PPP Second Draw or First Draw. You must still comply with size standards. Now, in First Draw, the size standard was 500 employees or less. In PPP Second Draw, it's 300 employees or less. So they're really focusing on the smaller businesses to help them through hopefully the balance or the rest of whatever effect of COVID has on our business community. So taking all those into consideration, that will still be your same eligibility for your businesses. For forgiveness, I'm going back and forth. The borrower can still apply and use either an 8-week payout period or a 24-week payout period, exactly the same as what we did with PPP First Draw. So that is the same thing for Second Draw, 8 weeks or 24 weeks. This is the sticking point that drove a lot of people crazy, especially the lenders. There was a confusion, a lot of problems with the EIDL program and the EIDL advance, and whether it was deducted or should be deducted from the PPP on the First Draw. That will not come into play whatsoever in PPP Second Draw. Whether you got an EIDL, whether you got an EIDL advance, there's nothing that will basically deduct from your amount of PPP or hurt you in your forgiveness. In fact, if the lender had already received a forgiveness payment net of an EIDL advance, the SBA is now working on a reconciliation program with those lenders to basically pay off the EIDL advance that was deducted from the money the lenders received. And for any borrower that may have a pending loan, because all their PPP forgiveness wasn't forgiven the first time because of that stupid EIDL advance, once the lender is paid off, guess what? The lender is then going to cancel that loan with you and the individual if you were shortchanged on PPP forgiveness. There's a lot of moving parts here. It's a little bit crazy, but again, remember, we've been doing all this on the fly since March, but we're getting better at being, the fly maker or the fly swatter at this point. And like in PPP1, which they tried to do, they're going to definitely do a better job on anyone who received $150,000 or less. There's going to be a very simple forgiveness application process, and you will be automatically forgiven in almost every case. Okay, so hopefully that's been a good catch up on PP First Draw and forgiveness. Now we're going to talk about Second Draw, but I'm going to take a swig of water because I've been talking since 6 a.m. this morning. Okay, so anyone is eligible for PPP Second Draw if they receive the First Draw. Very simple. I get so many emails that say, I didn't get the First Draw, can I get the Second Draw? Obviously, it doesn't make sense. So you got a First Draw, you're eligible for Second Draw if you meet certain requirements. Now, the biggest difference between First Draw and Second Draw is the amount of money that any individual can get or any aggregate businesses can get, affiliated businesses can get. And I'll explain that why as well. Before it was an individual business could get up to $10 million and in aggregate 20 million if they had a group of businesses together, especially in the restaurant and hospitality industry. Now the cap for every business is $2 million and the aggregate is $4 million. So you will see that if you're a business that received in excess of $2 million last time, you will only receive up to $2 million this time. It's basically to allow the funding that's come from the federal government to spread out to more businesses. Now, to remind the people here, in PPP First Draw, the banks of this great state of Nevada and the national banks that supported the great state of Nevada issued over $4.1 billion in PPP loans. 4.1 billion. We were in the upper 10% of all states per capita in distribution of federal proceeds for PPP1. I have a feeling that we could basically eclipse that and maybe even double it this time because the banks have gotten better at this. I hope the system's gotten better and people still need money, even though it's a lesser quotient, 2 million as opposed to 10 million. The average PPP loan size was less than $170,000. So you could see our ability to help a lot more people will be spread on an even greater rate. For most borrowers, the maximum loan amount for PPP second draw will be 2.5 times their average monthly payroll for 2019 or 2020, depending on what you use for backup. Now, I'm going to answer a lot of questions right up front. If you used 2019 940s to get your PPP first draw, you can once again use your 2019 940s to legitimize yourself for PPP second draw. The question came up several times to me already, probably about 4 or 5 score, is, well, what if I don't have the same amount of employees this time around? Remember, everything you borrow, you still have to use. If you use it and use it in eligible expenses, you are going to get forgiven. It's still the same. 60% or greater of the PPP funding has to go toward payroll. 40% or less can go for other PPP eligible expenses, which we talked about earlier. So understand that even if you say you got $350,000 last time, but now your employee count is less than last time, but you're using 2019 because the bank already has the information, or that's the best information you have for the current period to get your PPP second draw, realize that you're going to still have to use that money and use it according in the 8 to 24 week period with other and for payroll and other eligible PPP expenses, because I want everybody forgiven. So understand that. For you that are sole proprietors that are constantly calling and asking, it's very funny. Sole proprietors are asked 25 questions and the larger business will ask 1. And sole proprietors are basically getting, in most cases, $20,833 when you're doing larger loans for the larger businesses. As it's an old banking, I guess, thought process that you spend as much time on a $100,000 loan as you spend on a $3 million loan. Well, it's no different in PPP. You spend as much time in independent contractors as you do with large corporations. So understand, as an independent contractor, you can use your 1099 from 2019 because they're not issued for 2020 yet as basis for your monthly average payroll. Now, the only thing that is a major difference in this time is if you're in the accommodations, in the hospitality industry, hotels, or you are in the food service business, restaurants, and your NACE code, which everybody should know what that is, starts with 72, where all other businesses are basically getting 2.5 times monthly average payroll. The hotel and restaurant industry has been hit so hard because of COVID, because of restrictions by the state, because of mandates, so on and so forth. The restaurant industry and hotel industry is eligible for 3.5 times or 3.5 times their monthly average payroll. So if you're a restaurant and last time you did 2.5 times your average monthly payroll and got $500,000, guess what? This time you'll be able to increase that. So I think it's almost $625,000 if you use the same documentation information you used last time. Understand that the reason why we're doing this is because those industries have been hit so hard, and we want to do the best we can to basically provide you the maximum amount of federal funds to support you as we come out of this, hopefully very successfully. On PPP second draw, and the other thing with restaurants and hotels, it's the same as first draw, where most businesses can only get 1 PPP loan in most industries. Restaurants and hotels can get multiple loans if they have multiple restaurants, multiple hotels. But remember, before the aggregate was 20 million, the aggregate now is 4 million. So you may have as many, and I have an entity I'm talking to right now that got 8.5 million last time. I told them very simply, you're only going to get 4 million because that is the maximum amount you can get per group in the restaurant and hotel industry, anything that starts with 72. In the PPP second draw, the form that everyone will use is called the 2483-SD. Guess what SD means? Second draw. So that will be the active form. If you're trying to do a second draw and using the old 2483 revised, you are not filling out the proper information. The main reason why it's important that you have that information at your disposal is because when you are applying for PPP second draw, there are certain eligibility requirements that I'm now going to go through. And this is the most important part of what I'm talking about. So I said, anybody who was eligible for first draw and received first draw can apply for second draw. If you receive first draw funds and have not been forgiven yet, that's fine. But you have to attest and certify to your lender that you've either used all your first draw funds, or this is an interesting one in the policy, or intend to use your first draw funds. Well, I don't know anybody who's not going to intend to use their first draw funds. So you should automatically be eligible for second draw. But again, you've either used your first draw funds or intend to use your first draw funds. Even if you have not applied for forgiveness yet, you will be eligible for second draw. Number two, very, very important, instead of a 500 employee threshold, we're at a 300 employee threshold this time. We're focusing on smaller businesses that were harder hit. And for what we're focused on and concentrating on, we've sort of lowered the level. So let me ask you a question, or the question has been asked. What if you had 490 employees the first time, but because of attrition, because of shutting down, because of slowing down a business, you applied and got it the first time over 300, but now you're applying the second time and your count is now under 300. You're eligible. You know, it will change. We know there are businesses out there that have basically their employee staff, their staff has changed markedly. So yes, you could be eligible in the first under 500 and then eligible second under 300. If you're still over 300 at this point, you could be deemed ineligible. But if you're in that type of situation, please don't hesitate to reach out to me. And there are some ways that we can see whether or not you could still be eligible, even though your numbers are a little higher. And the last and most important, and this gets where it gets really confusing. In order to be eligible, to make the attempt at PPP second draw, you have to meet this most important requirement. You have to be able to evidence that your business has suffered in loss of revenue. And Stacy, I have a clarification on that very soon. We're going with the loss of revenue, top line revenue. I'm going to stick with that for right now. A loss of top line revenue, 25% or greater. And this is where it gets interesting, quarter over quarter. So almost everybody went in the tank in the second quarter of 2020, almost every business out there, between shutdowns, everything else. So if you take your second quarter of 2020, you compare it to your second quarter of 2019, and there is a greater than 25% loss of revenue quarter over quarter, I love saying that word, you will be eligible for PPP. Very simple. You don't have to pick the second quarter. You can pick the third quarter or fourth quarter now that we're now done with 2020. But any quarter in comparison with the identical quarter, remember, identical quarter. So if you pick third quarter in 2020, you have to pick third quarter in 2019. If you compare the two quarters and you basically show 25% or greater loss in revenue, you're eligible. Now, how do you prove that? Not every business does quarterly statements. Well, you can either do it by taking your monthly statements and doing it consolidated on your an Excel spreadsheet, and you can show your bank that this is what I did this year, this is what I did last year. It's 85% loss in revenue, I'm eligible. It could be 25.1% loss in revenue, you're eligible. And again, right now we're going with top line revenue because the IFR seems to be confusing and we're trying to get that fixed. And the push that we have is that top line revenue is the only thing that matters. Okay, so, and I'm going to stick with that right now until somebody writes legislation that proves me wrong. So when we're looking at that, so the first question that's come up, well, what if I'm an independent contractor? Or what if I don't do P&Ls? What if all I do is my year-end tax returns with a Schedule C? What we have in the IFR, it says that you can go down through several different things, including P&Ls and so on and so forth. And the last one is bank statements. I have told probably close to 100 independent contractors in webinars already that if you have your bank statements from the second quarter or third quarter or fourth quarter, and you compare them to your bank statements from last year's second quarter, third quarter, or fourth quarter, and you have 25% or greater deposits in your bank account representing the revenue to your business, guess what? You're eligible. And the banks will accept that as necessary criteria. For any motivated overachievers that are out there that have their 2020 tax returns done already, which is probably impossible, or have their 2020 year-end financials done already, there is an exclusionary or there is also the ability for you to take the full year 2020 by internal profit and loss over the year ending and compare it with your P&L for 2019. And if there is a global 25% or greater loss in revenue, the banks can also accept that. So the question that comes up all the time is, I would say this is a quiz if I was going to be interactive, but I'll give you the answer as well. What was the eligibility date for anyone eligible for PPP in first draw? Well, I'll answer the own question. It was 2/15/20. So if your business existed before 2/15/20, so say you started business the first week in January 2020 because we were booming, and you started that business the first week, second week, third week, whatever in 2020, but before 2/15/20, if you did that, if you put yourself in a situation where I'm in business, I was not in business in 2019, so my God, I'm not eligible. And you able to get first draw actually because you used 2020, you used the 2020 information to get first draw. What we're going to be able to do and what the banks are going to be able to accept is that you take your first quarter information in 2020, which Mary Beth will attest to, I will attest to. We thought we were on a trajectory to Zoom for 2020. What did we know? So everybody was kicking butt and taking names in the first quarter of 2020. So you take that first quarter of 2020 and you compare it to the second or third or fourth quarter of 2020, guess what? You're eligible if it's 25% or greater loss in revenue. So say you started your business, you made $1 million the first quarter, and then you went in the can the second quarter and made zero. I mean, I'm talking to business that made zero. You're eligible. You're eligible for PPP Second Draw. Now, this question comes up a lot. Well, what if my business is shut? What if my business is closed now? I've had to close since. Well, be honest with yourself. If you're going to take a PPP Second Draw and you don't have anybody to pay, what are you taking PPP Second Draw for? Now, there are businesses that have already told me that they had to shut down in June, or they had to shut down when the governor went to 25% capacity in their restaurant. And the minute PPP comes out now, 25% or nothing, they're going to go back in business because now they have that hedge. They have that additional cash that's going to help stabilize them while they're building their business back. That's cool. That's good. Be honest with your lender. I was shut down for a couple of months, but now I got second draw. I'm reopening. That's what we want you to do. We want you to reemploy people because now we're not competing with unemployment at the same level that we were competing with before, or PUA like we were competing with before. So people are getting ready and very eager and very willing to go back to work. So where we had the problems the first time around where people didn't want to get off because we're making $1,000 a week with unemployment insurance, well, now we're not directly competing with that as much. It's not as high a number, and hopefully, people will be able to start reemploying. That's the whole idea. I'm just going to remind you, there's going to be two forms that you have to be concerned about as the borrower. You need the 2483 form if you're going for first draw again up to March 31st, or you will need the 2483-SD if you're going for PPP Second Draw. Everything else doesn't matter. Those are the two most important forms. So now I've talked pretty much about PPP. I will say one thing about EIDL. For those who did not receive EIDL loans previously, the EIDL loan program was extended to 12/31/21. So you can still receive EIDL funding. Right now it's up to $150,000 per individual business and only one EIDL loan per business. You're now eligible to apply if you haven't applied before. It is my understanding in the legislation, and SBA is working on rolling it out, that there will be an EIDL advance again. This time the EIDL advance will be guaranteed $10,000 per business if you did not receive an EIDL advance before. If you received an EIDL advance before and you got less than $10,000 because they were working on that crazy machination of $1,000 per employee. So say you had 2 employees, you applied for an EIDL advance, you got $2,000. The legislation will provide you the balance or difference that you did not receive. So if you were a business with 2 employees, only received $2,000 and should have got a $10,000 advance because of some craziness that went on in headquarters, you will now receive the difference and it'll be a deposit in your account. I think they're going to ask you if you want it, but I think most people are going to take it. So if you had 8 employees, you received $8,000, you'll get the $2,000 difference. You had 5 employees, you received $5,000, you'll get the $5,000 difference. So that's the best update I have right now for EIDL. There is also something working on right now with our great Senator Rosen, and I will always call her the great Senator Rosen because she's done a great job in helping the state with PPP1 and now with PPP2. and with John Cornyn, the senator from Texas. They wrote the Cornyn-Rosen bill, or I call the Rosen-Cornyn bill, that would actually allow individual companies that were eligible for more than the $150,000 they received. So say you received eligibility, or you were actually eligible for the $2 million EIDL loan, and you only got the 150 because they changed things at headquarters. You would be eligible to get that difference. And that's quite substantial, obviously. And remember, the EIDL loan program is a loan program. It's a 30-year mortgage or 30-year loan, and it's a 3.75% interest rate for profit businesses and 2.75% interest rate for nonprofit businesses. The Rosen-Cornyn bill has not been finalized yet. If it is, it may be an additional bump to individuals that were eligible for EIDL loans or for more than what they received. Let me talk about the last program today that's going to be most important to you. I just got the legislation, and it's pre-decision, as it says right here, backwards. This is the latest, greatest information on the Shuttered Revenue Operators Grant Loan Program, or what we call the SOS, which could mean a lot of things to a lot of different people, but it's Save Our Stages in this case. Now, Save Our Stages was the brainchild, my understanding, of Chuck Schumer, who wanted to do something for Broadway and wanted to do something for constituents in New York. And that's a great thing, because guess what? What Broadway has, Vegas has better, because we have better food, better air quality, and we don't have to deal with New York City traffic. So for our venues here that are involved in, and this is, I'm going to go through the list: live venue operators and promoters, theatrical producers, live performing arts organizations and operators, relevant museum operators, zoos, aquariums who meet specific criteria, which is being outlined now, motion picture theater operators, talent representatives, that was an interesting one. So those who represent the industry, and each business entity owned by an eligible entity that also meets the eligibility requirements, which I have no idea what that means. But those are all the people eligible for this Save Our Stages program. Now, the Save Our Stages program basically it has $15 billion set aside for it. And in order to be eligible, other requirements are: you have to be in operation before February 29, 2020, and you have not received a PPP loan. The venue or promoter must not have received a PPP loan. Now, there's a lot of nuances to that too. And again, this isn't the legislation. This is just the best review I have for it. And it says right here, detailed information on eligibility requirements coming soon. Now, the SBA can't spend more than $12 billion for what they call first or second priority companies. And I'm going to go through all this real quickly. The SBA is required to reward at least $2 billion for grants to smaller employees with 50 or less employees during the first 60 days. Smaller businesses that have suffered the greatest economic loss will be first to be awarded the grants. And the calculations for revenue loss excludes any other CARES Act funding. So you can't get PPP, but you might have gotten some other kind of CARES Act funding. Exclude that from any kind of revenue losses. The amount of the grants, except for museum operators who may not receive more than $10 million in total for relevant museums they operate, eligible entity that was in operation on 1/1/19, the lesser amount equal to 45% of their 2019 gross revenue, or $10 million. So if you were in business on 1/1/19, and you will get either 45% or up to $10 million of whatever revenue you earned in 2019. That's a lot of money for a lot of these entities. So that is the amount of the grant that they're looking at in the initial phase. An eligible entity who began operation between 1/1/19, the lesser of the average monthly gross revenue for each full month you were in operation, multiplied by 6, would be the other way they're going to calculate it. So at the end of the day, when they calculate either the 45% or your monthly revenue average, I think they're doing that because maybe seasonality, you will get that amount multiplied by 6. But in either case, you can't get more than $10 million. So it's a great program for some of these entities that I spoke about. I need a lot more detail. And like I said, it's really going to come down to the details before I can really, you really expand on this and information wise. Mary Beth, what I suggest is once I get the full legislation, the policy, we can have another webinar for just this type of group. And maybe the lenders that will be very sensitive to lending to these type. Now, I'm sorry, I don't need you lenders. This is a direct grant program for the United States government. So lenders, you don't have to be involved in this. You could have disregarded everything I said. I'm not going to go to, there's 4 different priorities. It gets really crazy and really detailed. I want to leave enough time for questions, but let me tell you, for those out there that may be eligible for this, and you could be a grantee, it's a really good program. It's hopefully going to work a lot better than the Main Street program worked. And it's for everything. You can cover payroll costs, rent payments, utility payments, scheduled mortgage payments, scheduled debt payments, PPE payments, as long as it doesn't exceed $100,000 to independent contractors. I mean, administrative costs, operating leases, insurance payments, advertising, transportation. It covers everything. So I wanted to at least put that up there to let you know that we're working on it. It's going to be coming out. I don't think we're going to have full information on it until probably another week. But as soon as it's out there, I'll talk to you, Mary Beth, and we'll get this out there to the greater good. Last, before I take questions, we are working on this information also for the Spanish-speaking community. We're also working on this information for the Asian speaking community. I'm working right now with Sunny from the Asian Chamber to basically get this information out in Chinese, Korean, Vietnamese, Filipino, everything. We did an amazing job of getting it out to the minority communities the first go around. You know, we're going to do the same thing. We really want to focus on this. If you have questions that are ongoing, as I'm looking at the Q&A right now that I'll start answering, if you want me to start there, Mary Beth, and then we can go to general questions from there. You can contact the Nevada District Office for the SBA at 703-388-6611. Now, to slow it down for those non-New Yorkers, it's 702-388-6611. You can also reach out to us by email at nvdo@sba.gov. And that will, we will answer. I have staff answering those emails on an ongoing basis. You can also reach out on www.sba.gov. I never know if this is a / or /NV. I think it's a /. So www.sba.gov / NV. And that will get you into a queue that constantly updates, because we have another newsletter that goes out on a regular basis. That's https://www.sba.gov /updates. And if it's not / if it's /, let me know. But that should give everybody enough information. Most of you out here have my cell phone number if you need to call me and it's important. I'm not going to give it out this time because I answered 611 emails last night, and I'm trying to keep my sanity a little bit more level-headed from where it was in PPP First Draw, and actually get some sleep. That's it, Mary Beth. I can go through, there's only 11 questions right now. I can go through these real quick and see these, and then we can get live questions with hands raised.
Yeah,
Okay,
I'd love to have you. Thank you, Joe. You're a machine, man. I took about 2.5 pages of notes. But yeah, just really quickly, I'd like to, before we get into the questions, and I do want you to handle those, I'd like to give an opportunity for Stacy, Phyllis, or Chris to chime in on anything just for a second before we get to the questions.
First of all, I just want to thank all of you, Mary Beth, Phyllis, and Joe. You've been my lifeline as a community bank here in Las Vegas through the last 10 months. So greatly appreciate all your support for the small businesses of Las Vegas. I would say, a couple of key things as a banker, Joe pretty much said it well, perfectly. Just make sure you're patient with us. The process is slightly different, very similar. We definitely have our ducks in a row a lot better than we did the first round. But if your lender is asking for something specific from a documentation standpoint, you will be able to hold yourself in line there a lot more easily if you get that documentation all at once. So if you piecemeal the documentation, you go right to the back of the line again. So if they ask for something, submit it very promptly, and that'll really expedite your application. The other thing that I saw was I had a lot of business clients who just didn't even apply for the funding because they felt like it would go very quickly. It did go very quickly, but then additional funds came after that. And we do anticipate that that could happen. So don't stand to the side and wait. Get your application in and make sure that you express interest because we do anticipate additional funding. There's a couple other key points. I'm going to leave that to Chris. We talked yesterday because Joe did so well covering so much. So I think I'm going to turn it to Chris to some other factors.
Yeah, there's a couple other factors that that we wanted to talk about, such as we had mentioned this morning before we started the Zoom meeting that in round one there was a lot of conversation and thought that the money was going to get run out. So businesses were out there applying at multiple organizations for the PPP in order to get their name in the pipeline as quick as possible. We don't believe and we don't think that that's an aspect this go around. So we stress to if you were part of round one in the PPP, to go back to your existing financial institution and apply with them. They've got most of any documentation that is required from you for round two also. And it's not necessary to go out there and apply at multiple organizations. So
in fact, it's frowned on 100%. You should not do that. It was done last time and it actually excluded a lot of people from getting money easily. So do not do that. There is plenty of money. We believe the Congress is actually going to appropriate more money if this money runs out. So do not want, if you love the banking relationship you had the first time in PP for first draw, absolutely stay with them. If you don't, if it was not a good situation, there was definitely some problems that we had with fintechs and so on and so forth, especially on the forgiveness side. Reach out to me, reach out and we can make some recommendations. You know, everybody represented here are great banks. If you didn't do it with them the first time, you could do it with them the second time. You do not have to go back to your original lender if you weren't happy. So yes, Chris, thank you very much for that.
yeah, the other aspect as far as going back to, you know, again, like Joe had indicated, if you're happy with who provided you the first round, you know, I mean, again, they have all your documentation as far as from round one. So it makes it so much easier to go with that organization. A lot of financial institutions will only do the PPP for companies that currently bank with them or currently have a relationship. So it's just better to go back to that same institution. Again, like Joe indicated, as long as you were happy with the service and the way it all worked out. So.
Thank you, Chris.
Phyllis, did you have some comments before we let Joe get to the questions?
Yeah, just real quick. And thank you, Joe, for digesting those volumes of complex information. You make it real easy to sit on this panel. And thank you, Chris and Stacy. Those that are in the direct provision of these loans to borrowers have just put in hours that borrowers can't even imagine. And so thank you for all that you're doing to get these funds deployed to the businesses throughout Nevada. As Joe mentioned, the program is open. Community financial institutions that serve low and moderate income and minority populations have been lending since Monday for first draw. They've been able to access the SBA portal since Wednesday for second draw. I think Joe also indicated that banks and lenders under $1 billion will be able to begin tomorrow on Friday, with all other lenders having access to the SBA portal on Tuesday, January 19th. That doesn't mean you can't contact your lender now. It doesn't mean you can't start gathering paperwork. And by all of these great questions in the Q&A, it looks like people are already doing their homework, which is great. So I think both Stacy and Chris mentioned, and Joe too, that it's easiest and the least amount of friction if you go to the lender that your first PPP was drawn on. Secondary to that, if that lender didn't serve well or isn't available to you, the second least friction will be a lender that you have a business relationship with already. And if your bank or credit union or lender is not participating and some won't be. I know Joe will have a list and I have a list of folks that are accepting both new first round and new second round applications. So
Phyllis, I know, and speaking with Chris yesterday, we have, a client base that we are looking to immediately support for the second draw. And, but we do have information that we have out there. I know for Lexicon, we have PPP 2021 at lexiconbank.com. You can express interest there. No guarantees. We will do our best to get back to you. We do have a lot of businesses we're seeing move, from bordering states. So, you might be new to Las Vegas and looking to switch banks. So I know Chris and I are, here to do our best to serve the Las Vegas community. And, but, priorities, we are working on our existing client base, but if we can help those who are in need, we do have an interest list.
Okay, excellent. And with that, Joe, let's let you dive into some of these questions.
Okay, I'll hit Brent's first since he was the latest I think I got. If you received, I'll answer this for most of you. If you received grant PPP money, anything that you received in 2020, that is not revenue. So do not include it in any of your calculations. PPP first draw, it shouldn't be in any kind of revenue calculations. If you received any other federal grant in normal GAAP procedures, that is not considered revenue from a standpoint of the business operation. So, you do not have to keep that in your calculations. Somebody asked a question, they think that you don't have to provide information if your loan is 150,000 or less to prove out the 25% or greater loss in revenue. That's sort of a double-edged sword. Most lenders I'm working with have asked for that information anyway. The reason being is it's going to be required for forgiveness. So they're giving you a PPP second draw loan with hope and intent that you're going to be forgiven. If you're putting information in there and you're saying to yourself, I can attest, I can certify, so on and so forth. When it comes to forgiveness, you have to. So some lenders are telling me, I don't care about it, I'm not going to take it. They're attesting, they're certifying, we can get them the funding. Some lenders are saying, listen, we still want you to provide the information. You're going to do what your lender tells you or they're not going to submit your application. That's simple. So under 150,000, it says actually on the form that you do not have to provide the information now, but you need to have it ready for forgiveness. If a bank's asked you for it now, provide it now. You're that much better off that you have the information that you used anyway. Same thing, your PP second draw is not revenue. It's not considered top line revenue. An employee count forgiveness be based on the period we use to calculate to 2.5%. Your employee count for forgiveness is going to be based on what you put on the form 2483-SD. It's the same situation as PPP1. You're going to have to do your best to get to that employee count, maybe exceed that employee count if everything goes well. If you're having problems getting that employee count, there's still some waivers. But again, you're going to use the number. You have to attest to the number that ties in reasonably with your payroll request and or your monthly payroll calculation and the number that you put on the form. That's what you're going to have to attest to. Let's see. Oh, by the way, somebody told me it's /. So now I know it's /. Okay. Everything I said was /. And some people asked about the phone number. I think John Miller said I spoke too fast. It's 702-388-6611 if they want to talk to the SBA directly, my district office. We do accounts receivable. I'm not sure of that one. David, I'm gonna have to get in touch with you directly. David, reach out to me at joseph.amato@sba.gov. See, I gave it out already. I already answered the 150,000 question. So yes, if a bank is telling you that you had to spend all your PPP money before you're eligible for PPP2, that's not correct. It's either you have spent it or you intend to spend it. There are certain lenders out there that are a little bit more hardcore. The IFR simply states you either spent it or intend to spend it. You have to certify and attest that that's your case. You're eligible. If a lender is telling you otherwise, they're wrong. And you can tell them to call me and I'll tell them they're wrong too. I don't know anything about the PPP and employee retention credit. I don't know anything about it. So Mike, I can't answer your question. I'll look into it. Sewald, if you're on this call, see if there's anything about PPP and employee retention credit and whether or not you had to choose one or the other going forward with PPP second draw. Thank you, Jared, for your explanation on /. A single member LLC didn't take an owner's draw. Now, remember, if you were a single member LLC, the banks were requiring you to provide a Schedule C. And off that Schedule C, whatever your net income was, they were dividing by 12 times 2.5 was what the money you were getting in PPP. And some people were getting shortchanged. If you're providing a 2020 Schedule C, make sure your bottom line is truthful and robust so you can get more PPP funding. But if you're using your 2019 Schedule C, basically understand that it's limited to the bottom line net income times 2.5, divided by 12 times 2.5. In a lot of cases, people did not get very large PPP loans because any business that has a Schedule C is usually trying to minimize their tax impact, and that would definitely be detrimental to a larger amount of PPP funding. Let's see, I've read the 25%. No, Christopher, as I just said, the 25% or greater is for all companies, whether you're getting 150,000 or less. It's just whether or not your bank's going to ask you for proof of that up front. Under 50,000 or less, they don't have to, but some are. If they do get it to them, you're going to need it for forgiveness anyway. I missed a comment about some simpler applications for. There is not a simpler application. For PPP1, there's a simplified application for forgiveness for loans under 150,000 or less. There is not a simplified application for PPP first draw. It's the 2483 for first draw, 2483-SD for second draw. This is an interesting one. So I'll write this one down too. If you're a nonprofit with no employees, can you still be eligible for PPP second draw if you receive first draw? I would say yes. If you started in the first quarter of 2020, I'd still say yes. I'm just not sure how they would figure out a monthly payroll average for PPP if you have no employees. So I'd say you're eligible, but if you don't have employees, you might be eligible for zero. So I'm gonna have Sal look in that as well. Are idle loans requiring collateral? Yes, if it's available, the SBA is doing a blanket UCC lien on your business. That is a collateralized lien. It is a blanket. It basically says if you default on the loan, we can come after your business. If you go out of business and there's nothing to get, they're not going to get anything. But it is usually a blanket UCC on your business, which is a collateralized instrument. So they are not taking houses or individual pieces, but they are doing a general UCC against the business. So yes. It looks like they're saying if the reduction in revenue is 25.4, would you qualify? Yes. If it's 25.0, you would qualify. The basis for calculation 25, the way you keep your books or tax basis. It's the way you keep your books. If you're a cash basis company, it's 25% or less, you're eligible. If you're an accrued based or tax based entity, and it's 25% or greater, you're still eligible. All right. I'm getting down to hopefully some of the last here. Okay. So if somebody's asking about the aggregate of businesses. So if you're a restaurant, you own 6 restaurants. And last time your 6 restaurants got $5.7 million. Okay. What's going to be different this time is that your 6 restaurants can still all get PPP second draw, but you will not be able to get the 5.7 million. You'll get a maximum 4 million. So if you have 3 hotels and last time you got 18 million, you got the bonanza, okay? Because of your hotels and the amount of employees and so on and so forth. This time you can still apply for those same 3 hotels, but your aggregate of the 3 hotels instead of being 18 million will now be 4 million. I hope that simplified it for you. People have applied yet for forgiveness for PPP. Do you recommend waiting for forgiveness form? No, you can apply for second draw now as long as you've used the funds or intend to use the funds. That's simple. Okay, I think I covered all the ones that were on the Q&A. If anybody wants to ask direct questions, we're available.
Sounds good, Joe. Thank you. Dylan, do we have anyone who would like to unmute and ask a question?
I'm not seeing any at the moment.
Give him a minute. Let's see.
Hey, Joe, can you go to the chat? There are a couple of questions.
Yeah, I'm looking at the chat right now.
Okay.
I love technology. I'm going to answer the later ones first. None of my questions were answered. So when I see your name, I will make sure I answer it. If you are a company that did not qualify for PPP on the first draw, you will definitely not qualify for the second draw. It's basically the same type of companies, except for the exclusions that I added. Somebody just added if a finance company was not eligible for first draw, they're not eligible for second draw. The only ones eligible for second draw that were not eligible for first draw, which means you have to get a first draw, is housing cooperatives, destination marketing organizations, and news organizations. They were not eligible for first draw. Now they are. Okay. Let's see.
Actually, I've got a few hand raises coming up.
All right.
Um,
They can ask while I'm looking through these.
Guerin, if you want to go ahead.
Oh, see, he's asking. Go ahead, Karen. Ask your question, please. New Yorkers are the best. Thanks. That's why I moved to Nevada.
Guerin, you should be able to unmute on your end.
I do see his question. It says if you did close a business during Q3 and receive PPP now with the intention of reopening and you can't get business going again, is your worst case scenario that you took PPP and have to pay it back? What are terms or PPP loan under this scenario, interest rate term, et cetera?
5 years, 1%. Okay, and if you reopen, which I talked about earlier, and you try to make it go, and because of whatever, it fails, what I would do is try to stay open for 8 weeks. 8 weeks, you're fully forgiven. You know, make the best you can for that 8 week period. You distribute those funds over that 8 week or 24 week period, and you can't make a go of it for whatever reason. You're not you're not penalized, but you have shown or proven that you've used the money. Now, say you made it through 4 weeks and only used half the money. You will have to pay back half the money. Basically, you'll be forgiven for the part you used. You will be, and the rest will be a loan between you and the bank. Okay.
And then Ray Milner, you can go ahead and ask your question now.
Okay, my question is, will there be any credit-worthy restrictions on any of the loans?
Okay, the thing about PPP, different than EIDL, there's no personal guarantee. So guess what? There's no credit check. Stacy, do you agree? Chris, do you agree? They're shaking their head yes. So don't worry. I mean, obviously, you want to be able to pay back the loan, or get fully forgiven. But yes, there is no, there's no credit check. There's no personal guarantee. Yay.
Okay. And then David Rounds, if you want to go ahead and ask your question.
Yes, hi, Joe. Thank you very much. And Stacy and Phyllis, and of course, Mary Beth and Chris. Quick question is, I'm still not 100% clear on what period we would use to calculate our payroll. Can we do a period in 2020, or do we use one in 2019 like we had for PP1?
As I said earlier, you can use your same information as you did for PPP1, especially if you're going back to the same bank, they already have it. If there is a significant amount of change, the recommendations I've been making to people and businesses, if there's a significant amount of change between 19 and 20 and what you use to get PPP first draw, that you either cannot use all the money, or in some cases you've grown. So you may have had a great first quarter, a second quarter in the toilet, and third quarter, fourth quarter, you rebounded. So you are eligible because you have their second quarter toilet issue. And then now, instead of in 19, you had 20 employees, and now you have 40 because you're picking up business where other businesses think they're closed or shuttered. And I'm seeing that happen a lot. I think Stacy, I think Chris will have seen it as well. What you're seeing, what is going to happen in a situation like that is you want to use your 941s for 2020 to substantiate your monthly average payroll. That simple. You want to substantiate because now you're going to be able to use more money instead of less. So I would definitely, it would behoove you to use 2020 numbers at that point.
Joe, to accompany that, do you want to talk about the FTE equivalent piece? You brought that up yesterday. That tends to come up for us as bankers quite a bit from a seasonality standpoint. That calculation conversation comes up half the time.
And it comes up a lot when somebody's over 300 employees. But in some cases, what we're looking at is the SBA is concerned about the full-time equivalent employees you have. And I don't want to get into this person works half-time, this works quarter time, this works a third of the time. What really comes down to, and I've said this in PP First Draw, and everybody sort of, raised their eyebrows when I said it, it's the amount of bodies you have working for you. That's what matters. So in essence, you're trying to get funding to cover payroll. So you know how many people that you have working for you, whether you work full-time, part-time, whatever. And normally, especially if you're over the 300 number, it really comes down to what your average number of employees are at a full-time basis, your FTEs. So if you have, I have a business that has 395 employees. They have 165 full-time employees. I told them to apply for the FTEs, the full-time employees, the 165. That way they're using the payroll for that 165. They're covering that 165. The amount of money goes in the same pool as the company uses to pay all its bill and payroll anyway. So it doesn't matter. They just have to basically make sure they're reconciling on an every payroll basis that they're using the money for those 165 people. So it really comes down to the number of bodies working for you. And when you put the number on the application, keep in mind, you're going to try to correlate as best you can the number of employees on the application with the number of employees you intend on paying. And then you won't run into any problems with forgiveness. Any more hand raising?
Not at the moment. The rest of we had just a couple more just pop up.
Okay. I have enough time to run over a little bit, Mary Beth, if that's okay.
Okay, great.
Trin,
thank
if you want to
Yeah,
go
if
ahead
you
and
can, one or two more questions. Thanks. Go ahead.
Trin, if you
Dylan.
want to ask your question, please go ahead.
Yes, this is Trin. And this question might have been answered earlier, but I guess I just need clarification. So the eligibility requirements that we had to be in business since February 15, 2020, we did have a business license, although we only had contractors for the first quarter. By second quarter, we do have 2 employees. Would we still qualify under this if we actually didn't move into an employee-based system until April?
Yes, because remember, eligibility is based on revenue. PPP is based on payroll. So what you're going to use is probably a 940 or payroll abstract for the second, third, fourth quarter, whatever, so we can figure out what the average is, and you'll get PPP funding for those 2 employees.
And then my second question is that we actually didn't, we're not going to realize our 40% loss of revenue until 2021 because we're a nonprofit. Our state budget cuts came in the grant for fiscal year 2020 to 2021. So we actually won't see that loss until we compare our first quarter of 2020 to 2021. Would we still qualify in that sense as well?
That's an interesting one. And have you thought of what bank you're going to approach yet to do this, or what bank did you do it with first time?
We
Did you do a first draw?
We didn't do a first draw because I didn't think we qualified because we didn't have employees in that first quarter.
Okay, I see what you're saying. Okay, so you're going to have to apply for first draw, number one. And I believe I'll have whatever bank takes it on, if they want to give us a call, we'll do some research on the interim. I believe you should be eligible, and you should be eligible for something. You're a nonprofit. It definitely works a little differently. And I think at the end of the day, it has to be with a friendly bank that basically says, listen, we understand where you are and we're going to work with you. So, and a bank has that kind of leverage points on a case-by-case basis. For anybody, there's a question out here. It's a 5-year amortization, 1% interest rate. It's not a 5-year bullet or a 5-year demand note at the end of 5 years that you have to pay off back your PPP loan in 5 years. Okay. Was there one more or two more?
Yeah, let's do one more, Dylan, if we had another hand raised.
Yes, we have Eric, if you want to go ahead and ask your question.
Eric, you're up if you want to go ahead and unmute.
Yeah, interest on loans that are not PPP loans. In other words, I have multiple other lines of credit. The interest on those loans, is that something that I can apply for forgiveness as an expense? Thank you.
Let me make sure. I just got a text from Russell Rosenblum, and I always take his text. So Stacy, you'll laugh at that one. Can you say that question again? I'm sorry.
Yeah, can you hear me okay?
Yeah, now I can hear you, Eric. Go ahead.
Okay. As a business, I have multiple other loans and lines of credit. The interest on those other loans that are not PPP loans, can I get forgiveness for that expense?
Can you pay interest expense on other debt?
Right.
I believe as long as it's under the 40% cap.
Yes.
It was mortgage interest rates before, and now it's operational interest. So it's a business loan, it's operating expense, it's interest on
Yes.
an operation, on the operation of business. I believe you may be able to use it to pay the interest only, not the principal amount, but the interest only on that as well. So, and Tom, if you're on, definitely let's take a look at that one and make sure we're right on that one too.
Right, because we have that applicable to the first PPP loan as well as we're going to have that in the second one.
And there are some additional operating eligible expenses this time. So you're going to want to make sure you key into that and make sure you look at the receipts that you have and put those to the side as well for forgiveness.
Yeah.
Thank you.
And there was a
The other
question.
important part that Joe actually mentioned is just the interest portion. You can't get the principal aspect involved because in round one, I've had a couple of equipment loans that we did the interest only. So you got to be able to document how much of that payment is interest and how much of that payment is principal, because it's just the interest portion.
Exactly. And just Mary Beth, real quick, there was a clarification I got by text that I want to basically say. So if you're a restaurant group or a hotel group, NAICS code 72, and there's a lot of you out there, and each individual hotel and restaurant they may be affiliated in some way, but they're separately owned, separate different businesses, so on and so forth. If there's a common affiliation, the aggregate amount is still capped at 4 million. I do know a restaurant group that basically, they're not really a restaurant group per se, but it is a group of restaurants that each restaurant is owned by a different family member. And there is no cross, there's no cross ownership. In that case, each one of those restaurants are eligible for 2 million and there's no aggregate, and there's some of the family restaurants, especially back east, the Greek families, they put one under the cousin and another cousin and another uncle and a father and a brother. And as long as they're individually owned, they each can get 2 million. There's no aggregation. There's no affiliation per se. But if there's any common ownership and affiliation, the aggregate is still $4 million cap. Now, and the other question that he asked was, if you were 500,000 for 500 employees for PPP1 and drop below 300 for PPP2, yes, you're eligible to apply for PPP2 less than 300 if your employee base dropped because of everything that's gone on in 2020.
All right, very good. Thank you guys so much. Joe, Amato, we really appreciate all your time and your expertise today. Chris Schlaffman, Phyllis Gurgevich, Stacy Watkins. Joe, I'm going to take you up on your offer to do another one of these very soon because clearly people need this information and the Vegas Chamber wants to get it out to them as fast as possible. So I put a lot of the contact information, websites in the chat. So if you need anything, of course, or need clarification, feel free to call us at the Vegas Chamber. I'll give out my cell number too. It's 702-575-8020. So if you need anything, we can connect you with these experts on the webinar today. So thank you guys so much again. We really appreciate our sponsors, the UNLV MBA program and SCE Federal Credit Union as well. We look forward to talking to everybody very soon. Thank you guys again for joining us on today's webinar. Thank you so much.
Thank you.
Thank you.
Stay safe.